Hi, this is Yahoo. I'm macro option trader. It's July 31, 2025, 8:21 p.m. Japan time. Let's take a look at today's market. The Nikkei closed slightly higher today at 41070 yen, up just over 1%. That's after the Bank of Japan's policy meeting, where they decided to keep interest rate unchanged. Volatility also calmed down a bit. The volatility index dropped to 22.45, down from around 23 yesterday. So we saw stocks rising and volatility falling, which suggests that investors who were nervous ahead of the meeting may have stepped back from hedging, or maybe just relaxed a little. But one thing I'm watching closely is the Nikkei PER, which now stands at 16.54, and more importantly, EPS has fallen below 2500 yen. For the first time in a while, it's now at 2483 yen. This drop in EPS suggests that earnings momentum is weakening, and I don't think we are in a strong guidance environment anymore. Companies might be revising forecast now that Trump's 15% tariffs are officially reconfirmed. That's a significant jump compared to past rates, and I think this is starting to weigh on expected earnings. So yes, earning pressure is something to watch. And now shifting over the bond market, especially Japan's 30-year government bond, there's a bit of a fragile tone developing. I'm starting to see sign in my model that it may be heading higher. The tone in the bond market is not as terrible as it looks on the surface. The BOJ meeting is behind us, but I always say, watch out the day after the event. Sometimes the real market reactions come one day later, and tomorrow is August 1st, so I'm staying alert. Let's also check the US market. The S&P closed at 6363, down just 0.1%, so no major move. VIX is at 15.48, still quite low. But similar to Japan, I feel the US bond market has also been too calm recently. Um, when things stay too quiet for too long, small disruption can have outsized effect. Also, gold is starting to concern me. It's trading at $3,285 now, and the momentum has clearly weakened. While gold has been range bond for a while, it's now showing sign of losing stream. So altogether, I'm seeing a subtle shift in tone, both market getting shaky, gold losing momentum, while equities remain firm. This could be a warning signal from the modeling perspective. And while social media still feels friendly bullish, with lots of people calling for new high, I'm personally more cautious, especially with the tariff implementation officially taking effect on August 1st. Even Vincent mentioned that even if tariffs go into effect, let's not panic, which itself is kind of a red flag. So I say watch bond and gold and the EPS trend on the Nikkei. Those are quite structural shift I'm care about most. Last year around this time, we had the BOJ shock in August, a sudden drop. Some might think it's won't happen 2 years in a row, which ironically might make people to relax this time. So let's stay sharp. The market is still in consolidation phase, and we are watching to see if it breaks out or just keeps drifting sideways. Either way, I'm be watching closely. That's it for today's episode. Thank you for tuning in and check out the latest long put option strategy contents in if you haven't already. See you tomorrow.